SMX Security Matters plc closed its most recent trading session on Friday, May 1, 2026, at a price of $1.59, representing a significant intraday drop of 10.67% from its opening price of $1.78. This price action comes as the market continues to grapple with the company's high volatility and recent touch of its 52-week low of $1.45 just days prior. While many investors see a double-digit percentage drop as a sign of a failing enterprise, the reality within the order flow reveals a much more complex tug-of-war. Despite the falling price, trading volume has been surging, often exceeding daily averages by nearly 90%, which suggests that while some are fleeing, a specific class of high-conviction buyers is stepping in to accumulate shares at these suppressed levels. The expectation surrounding SMX is that it is a struggling microcap caught in a terminal downward spiral, especially considering its 52-week high was once at astronomical levels before multiple structural changes. However, the reality is that the company is currently positioning itself as the backbone of the new verified circular economy. While the stock price languishes, the company is actively launching its digital material passport platform, which aims to provide a submolecular physical-to-digital link for industrial materials. This is not just another software play, it is an attempt to solve the fundamental problem of trust in global supply chains. When you look at the sheer amount of institutional activity and the relentless pace of their press releases regarding partnerships in the luxury and recycled plastic sectors, you start to see a massive disconnect between the equity's market value and the operational milestones being hit behind the scenes. Recent daily swings for SMX have been nothing short of a roller coaster, which is why users on platforms like Robinhood or those looking for stock trading opportunities often find themselves drawn to this ticker. The intraday low of $1.57 on Friday shows that the stock is currently testing the floor of its valuation. For those utilizing interactive brokers or professional trading platforms, the high negative momentum reflected in an RSI below 30 might suggest an oversold condition ripe for a technical bounce, yet the falling trend channel remains the dominant force. We are seeing a pattern where any positive news is met with immediate sell-side pressure, likely from legacy holders or institutional rebalancing. This creates a high-pressure environment for anyone involved in self-investing or looking for investment help through services like Schwab Intelligent Portfolios. The volatility here makes it a difficult candidate for a standard intelligent portfolio, which typically favors stability over the speculative nature of a sub-$5 stock. If you are navigating the markets through the Fidelity mobile app or managing your own individual brokerage account, the key metric to watch right now is the liquidity and the free float. With a free float of roughly 6.86 million shares, SMX is highly susceptible to rapid price movements on relatively low dollar volume. This is the double-edged sword of microcap investing. Institutional activity has been muted in terms of massive block trades, but the retail sentiment on investing sites shows a growing interest in the company's Made in America verification initiatives. The broader sector momentum for specialty business services and industrial tech has been mixed, but SMX is trying to carve out its own niche by tying molecular marking to blockchain technology. This isn't just about tracking a box from point A to point B, it's about verifying that the silver in your jewelry or the plastic in your bottle is exactly what the manufacturer claims it is, right down to the molecular level. Comment below how many shares of SMX you currently hold, or if you are waiting for a further drop before entering. Do you think the market is unfairly punishing this company for its past structural changes, or is the current price a fair reflection of the risks involved? To understand why this stock is behaving this way, we have to look at what the company actually does. SMX Security Matters plc is essentially a B2B white label technology firm. They use a three-part system: a chemical marker, a proprietary reader, and a blockchain algorithm. They can mark solids, liquids, or gases. Imagine being able to tag raw oil or liquid gold and then identify its origins months later after it has been processed and sold. This business model is aimed directly at the sustainability and anti-counterfeit markets. In March and April of 2026, they pushed hard into the recycled plastic space, offering a way for companies to comply with complex plastic packaging taxes in regions like the UK. By providing a digital twin for physical goods, they are trying to bridge the gap between real-world assets and digital finance. For those of you holding Apple stock, Nvidia stock, or Tesla stock, SMX might seem like a total outlier, and it is. While those giants move on global macro trends and earnings beats, SMX moves on the hope of a single massive contract with a global manufacturer. The risk profile here is entirely different from what you would find in Fidelity mutual funds or Fidelity ETFs. This is raw, active investing that requires a constant eye on the news cycle. Recently, the company has been vocal about its efforts to stabilize prices in consumer markets by proving that rising input costs can be mitigated through verified recycled plastics. This is a bold claim, and if they can prove the economics of it at scale, the reality of the company's value could eventually force the stock price to catch up to the narrative. Looking at the future outlook, there are several catalysts that could shift the expectation versus reality dynamic. The partnership with Liquis to build a tokenized market infrastructure for verified industrial materials is a major project to watch. If this infrastructure gains traction, it could provide a level of liquidity and institutional credibility that the company currently lacks. However, the risks are just as prominent. The company has a history of high cash burn, which is common in the tech development phase, and the constant threat of dilution hangs over microcap stocks like a dark cloud. Investors using SoFi Invest or SoFi Active Investing should be aware that the technical rating for SMX remains low across most major screeners. There is no clear support level in the price chart yet, and until a definitive bottom is formed, any entry is a play on the long-term viability of their molecular marking technology rather than a short-term trend. For people who prefer a more hands-off approach, like those using a SoFi robo-advisor or Fidelity Wealth Management, this type of stock is almost never on the menu. It's too volatile and too speculative for conservative or even moderate portfolios. But for the individual trader using the Robinhood app or interactive brokers, the appeal lies in the potential for a massive reversal. We've seen this before in the tech sector. A company that looks like it's on its last legs suddenly secures a partnership with a Fortune 500 firm, and the stock undergoes a fundamental repricing. Is SMX that company? The reality right now is that they have the technology, they have the patents, and they have a clear mission. What they don't have yet is the consistent revenue to satisfy the broader market's appetite for safety. As we wrap up this analysis, the central insight is that SMX is a high-stakes bet on the future of supply chain transparency. The expectation is that the stock is headed to zero, driven by a brutal falling trend and extreme volatility. The reality, however, shows a company that is more active than ever in launching new platforms and securing partnerships that could redefine how we value physical materials. The gap between the current $1.59 price and the potential value of a global verification standard is where the opportunity and the extreme risk lies. Whether you are managing your retirement through Fidelity IRAs or trading daily on a brokerage app, you have to decide if the submolecular truth SMX is selling is worth the price of admission. The narrative of Made in America with proof built into the materials themselves is a powerful one, especially in the current geopolitical climate. If SMX can successfully transition from a development stage company to a commercial powerhouse, the current price action will look like a footnote in a much larger story. But for now, the market is demanding more than just press releases. It wants to see the numbers. Until the financial reality aligns with the technological potential, we can expect this volatility to continue. Stay focused on the volume and the institutional interest, as those will be the first signs of a true shift in the market's perception of this unique Irish-based technology firm. Keep your trading platforms ready and keep a very close eye on the $1.45 support level, as a break below that could signal even more pain for the bulls. Regardless of which side of the trade you are on, the story of SMX is a perfect example of how the market's expectations can often be blind to a company's operational reality until the very last moment. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.